Restoration Hardware, that high-end luxury furniture retailer plus overall brand, is down 40% year to date. And I actually think this stock is getting pretty cheap, and I'm starting to get excited about adding it into the portfolio. So that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys? Restoration Hardware, the high-end brand, is starting to look very exciting, and this is what I mean. You can see that Restoration Hardware is down 40% year to date, the share price. Now, it did recover a little bit in August, but it's starting to trend down end August and enter into September. And overall, it looks pretty cheap. On a trailing 12 months basis, it's trading at 10 times earnings. And on a forward basis, it's trading at approximately 13 times earnings. So there's nothing expensive about this name right now. But because the valuation is so cheap right now, is that E overvalued? And so thus are the earnings expected to come down even more than what sort of analysts are predicting? And thus this could potentially be a value trap. And that's kind of what I want to dig into in this video and see if this is something worth investing in, or is it just overstated and it could potentially be that value trap that I'm worried about. And one thing that I do want to point out to you guys is the reason why I started investigating this name is a lot of you guys did say that Warren Buffett has invested into the name, and he absolutely has. But the one thing that I will warn you guys, and I warn you guys all the time, is do not follow Warren Buffett because you're playing a completely different game. However, there's nothing wrong with looking at the opportunities that these super investors are investing in. And so that's why I'm doing this video, because a lot of you guys did ask me to look at Restoration Hardware. So what exactly is Restoration Hardware? So you can see that they don't just sell furniture. This is RH1. This is their charter plane. Obviously, this is a smaller segment of the overall business, but you can actually charter this plane. And this here is RH2. This is their second private jet that you can also charter. Now, if you thought that private jets were the only thing that you can charter from RH, well, you'd be wrong. You can also charter a full yacht from the company. So they are totally all into this sort of like lifestyle high-end brand. And if you want your house designed by the folks at RH, well, they have a division for that. So there's people that just do interior design for the company. But overall, what exactly is Restoration Hardware? Well, you can see here that it's not just a furniture store. It's artistic installations of home furnishings in a gallery setting. And that's shown here with the RH West Palm, as it's displayed over 4 levels of artistic installations. Additionally, it also has a rooftop restaurant, and you're starting to see more and more of these pop up as they develop these new locations and move away from their legacy type locations. And here you can see that this is their Restoration Hardware San Francisco location. Once again, it has the installation for their furnishings as well as a live fire restaurant. And this is what the West Palm rooftop restaurant looks like. So it's pretty swanky. I'd actually like to visit this place one time. And closer to home, this is the Toronto location. This might be something that I might visit over the holidays, but very interesting that I didn't even know that this existed. But what I do want to point out is that RH is not just a furniture store. It's a place for collectors to purchase very rare and unique statement pieces. And so, of course, it's not cheap. It's definitely for the higher end clientele. And overall, what does the business look like? Well, you can see that they have 81 retail locations. 27 of them are their new design galleries, but you can see that this company is still moving away from its legacy business. They still have 36 legacy galleries. And so as the business develops, they're going to move away from those, I believe, and move more into those design galleries. And you can see from here that most of their business comes from the US. So there's a huge opportunity for growth in the Middle East, in Southeast Asia, in Australia, and in Europe for the RH brand. I think that they can grow in all of those locations. The one thing that I do want to point out is that I'm not super familiar with the US market. I'm sure you can put in more locations in many of these states, but what I am sure about is the Canadian market, and it's crazy that they have 2 locations in Alberta, but just 1 in British Columbia and 1 in Ontario. I would say you can at least have 2 locations in Ontario, maybe 3, so 2 in the GTA, and then 1 in Ottawa. and then you can probably have 2 in British Columbia at least. And so they can still even grow in Canada, which tells me that they can probably grow in the US in states like Texas, where people are moving, definitely Florida, maybe, I don't know, maybe more in Washington. They only have 1 in Washington, and maybe another in Michigan. I don't know. And you can see from here that the company was in the dumps, but post 2017, they really turned themselves into a established high-end brand. And so you can see that the gross margins on their products steadily ticked upwards up until 2022. So now they've surpassed that 50% area. And of course, their operating margins are now in the mid 20% range. So this company really turned around. And I do believe that they're going to continue to move in this direction, albeit it'll probably grow slower. I would say that the gross profit margin will probably stick around that 50% area. I'm not going to forecast it any higher, but I could see the operating margin tick a little bit higher. And since RH reinvented itself, the company now focuses on higher margin, sustainable businesses. This has pushed their gross profit margins up, as you saw in that last exhibit, and the operating profit margin to almost 25% in fiscal year 2022 from the low single digits in 2017, where you see that 2.5%. So the question is, how should we be looking at this business going forward? Are they going to continue the momentum that they've seen, or is this economic sort of catastrophe that we're potentially moving into in this environment going to stop this business in its tracks? Well, they provide some guidance to us for what they see 2022 ending at. So you can see here that they came out in the second quarter and did say that the deteriorating macroeconomic environment has resulted in lower than expected demand since their prior forecast, and thus they've updated their outlook. So they do believe that revenue is actually going to contract by 5% or up to 5%, and the adjusted operating margin will be in that 21 to 22% range. And so this is what the CEO just came out and said. He said, with mortgage rates doubling last year's levels, luxury home sales are down 18% in the first quarter, and the Federal Reserve's forecast for another 175 basis point increase to the Fed funds rate by year end. Their expectation is that demand will continue to slow throughout the year. And so the question is, where do I see this business not just in 2022, but beyond 2022? Well, you can see that I am forecasting revenue to drop by that full 5% this year. I'm not expecting any growth in 2023, and I'm expecting a ramp up thereafter into that 10% a year growth. And so I also brought profit margins down, and I keep them down. So remember that their gross profit margins were around that 50% mark. I actually brought them down to that 46, 47% area. So that just provides a little bit of conservatism in my valuation. You guys feel free to adjust that how you wish. And then when it comes to their operating profit margins were around 25%. I actually brought that backwards. And so I ticked up their SG&A. And the reason why I ticked up their SG&A, I do believe that at least in the short term, inflation is going to push up the cost of getting people to work in these galleries. And so they're going to have a tough time recruiting and finding people. And so it's going to push up salaries. And I don't think that they're going to take it with the margin on the products. I understand that this high end and they could potentially pass it on, but we're in unique times. And I did forecast that out. So there's another area of a wide amount of conservatism in my valuation. You can absolutely bring those gross profit margins from that 20% area to that 25% area. And I do think that you probably should do that, but I'm just being super conservative in my valuation. Now, before I go into my ultimate valuation, I do want to remind you guys that approximately 80% of the watch time on this channel is from people that aren't subscribed. So if you can, please consider hitting that subscribe button and ring that notification bell to be notified of other great videos and analysis that I do. All right, guys, now let's get right into that valuation. So you can see here that using a terminal multiple of only 15 times earnings, which I do think could be somewhat on the low end, I'm valuing the company at approximately $500 per share. It's currently trading at $300 per share. So there's $200 per share of upside. I am actually interested in this name under $250 per share. So the way that I'm actually thinking about playing this is I'm going to be looking at the cash secured put opportunities and seeing if I can get a yield somewhere around that 15 to 20% range. And once that happens, I'm going to hit the trigger and sell that cash secured put. So we'll see how this plays out. But this is a name that's added on my tracker. And if the economy deteriorates even further, I do believe that this share price could come down even further, and thus I'd be more interested to buy it. Imagine what would happen if this share price came to like $150 per share. I'd probably back up and buy a real meaningful position in it. So that's kind of how I'm thinking about it. Guys, let me know if I'm psychotic and if I'm running down the wrong path by looking at this company to put in my portfolio. Let me know in the comments what you guys think. Now, speaking of high-end brands, I actually just did a video on Starbucks, and you can get to that video right here.